this one pattern that always presents itself, and it has made me very, very profitable, very consistent, and has allowed me to not only bless thousands of people with, you know, skills and trading and signals, but now I'm at the space now where I can actually develop my own entire academy and know for dang sure that I can help every single person learn how to trade if they follow the one thing y'all dropped in the chat box, which is consistency. I don't get fired up because people want to learn how to trade. I can care less about that. I get fired up when I see that person still hanging around 612, 2 months, 2 years later, not just being here, but they decided to follow the same path, learn the same lessons, study the same technique over and over again, because it's easy to get scattered in this space, right? So my question for you guys tonight is, I think my master class, when I taught, one of my last class was about risk to reward and understand risk management. I really don't think people really know what they're supposed to have. I don't think people really know the amount of capital they're supposed to have. Do you guys know how much capital you're supposed to have in your account to actually trade? Like, you can be a 50%, 40% winning ratio and still being a phenomenal trader, because that person understands risk over reward. All right. So my question is, do you guys honestly know what amount of capital you're supposed to have in your account to trade? And do you understand risk to reward really thoroughly? Yes or no? 1 for yes, 2 for no in the chat box. 1 for yes, 2 for no. And if you do know, tell me what rule you're following right now. Tell me what risk management, or what's your risk management? Like, what are you willing to lose per trade? Is it 3%? Is it 1%? I think this, I say this training, I've been saying this training a lot more because people just are not getting it. It's not just knowing a technique. It's not just having emotional intelligence. The other part of the 90% is understanding risk to reward, understanding risk management. So my question for you guys is, what are you willing to risk per trade? And if you don't know what that answer is, say, I don't know yet. All right. So if you don't know the answer, put, I don't know yet. If you do know what you're willing to risk per trade, put that percentage in the trade. If you was in my masterclass, do not answer. And this masterclass is past weekend, don't answer. So I need to know that, because once you get over the Kiki, you know, once you get over entries and all that, that is the 10%, y'all. I promise you. Like, once I teach somebody who trades half as good as me in risk to reward and risk management, they can make more money than me because they get it. All right. So this is a class participation. So what is your risk per trade? Drop that in the chat box for me. What's your risk per trade? And what's my other phone? Risk per trade. What's that? And if you don't know yet, drop a 3 in the chat box. Let me see. Perfect. We got 3%. All right, good deal. Anybody else? We got about 8 folks on this call. Everybody else, what is your risk per trade? Okay. Okay, good deal. 2 to 3, 2 to 3. Don't know yet. Perfect. All right. So for my people who put 3%, what I need you guys to understand is, okay, my second question is 7%. Got you. Okay. So that's what you're willing to lose per position. So my second question is, what is your profit goal? Are you trying to grow your account 1%, 2%, 5% per trade? I need to know that answer per trade. Okay. I need to know that answer. And if you don't know yet, just put don't know yet. All right. What's your goal? Okay. Let me know. Let me know. Even with following the compound plan, you have to know what your risk and risk goal is. All right, 5%. Okay, good deal. Everybody else, what's your risk? What is your profit goal? What are you trying to grow your account by per position? Don't know yet. Okay, cool. And if you're following the compound plan, you have to know what your risk and your profit goal is. Okay, cool. So is the 5% the risk or the 5% the profit goal? Okay, cool. Now, do you guys find yourself breaking even a lot? You see yourself having a successful week, but then, you know, successful day, but then you're like, you look at the end of the week, it's like, kind of like it came back to square one. So do you guys find yourself breaking even a lot? Okay, yeah, yes. I've definitely been in that space. I found myself breaking even a lot. Right around end of 2019. All right. I did before, yes. Okay. So the key to So somebody said 65%. What does that mean? 65%.
I'm a little bit above 50%, about 65% for the week, you know, here and there. I protect my
You mean like growing your account 65% or profit over loss ratio?
If I take 5-6 trades a week, I end up a little bit above 50%. I might not hit my profit target, but I move my stop losses in profit to protect my loss and whatnot.
Okay, perfect. Thank you. And then, okay, good. All right. So what you guys want to understand is whatever you are trying to, whatever your risk is, it also has to be at least your profit goal. So if you're risking 3%, your profit goal needs to be at least 3% because your risk to reward ratio, meaning 1-to-1. So you're risking one. If you're risking, okay, so let's say somebody said 5%. All right. So that means out of $100, you're willing to risk $5. All right. And if you lose $5, cool. You're not tripping because you decided before you place that trade, worst case scenario, you lose $5. If you place a 7% risk, that means you're willing to lose $7 out of $100. Okay. So what you have to understand is one of the things I ask myself is how many positions will it take before I blow an account if my risk is 5%, if my risk is 7%, right? So if you did the 7%, you know, within about 10 to 15 trades, your account would be completely wiped out consecutively if you lost that many consecutively. So that was one question I asked myself. So you guys have to also understand is if you got a 5% risk, so let's say you lost $5 and you did a 20 to 30 pip stop loss. So if you do $5, that means you can invest a 10-cent position at a 50 pip stop loss. All right. So I invest 10 cents. When that 10 cents hits 50 pips stop loss, that means I lost $5. Okay. You also have to be willing to make your profit go 50 pips worth of profit. So you can't say, first of all, your stop loss should never be greater than your take profit, ever. That is a complete fail. That just means you probably don't know yet. All right. You should not have a stop loss greater than your profit. Okay.
Even if you're trading G pairs,
your stop loss should never be greater than your profit. It has nothing to do with pairs. All my stop losses are more than 20 to 30 pips. It has nothing to do with pairs. Your stop loss should never be great. Now, when the markets are whipsawing and very spiky, yeah, you may need to extend it a little bit more, but I haven't used a 50 pip stop loss and I don't know how long. All right. And if you're in my signals chat, y'all will see I don't do no more. If I do 35 pips, that's because I see news is coming or I see that the market is whipsawing. My most favorite stop loss amount is 20 pips, just so y'all know. So worst case, no more than 30. So yes, the key is if you are modifying, the only time people modify their stop loss and make it greater because they need to enhance their skill set. And if you're doing a 50 pip stop loss, that's totally fine. You still have to understand if you're going for 50 pip stop loss, you need to be going for the same amount. So I'll put it this way. If you're going for no more than $5 loss, you need to go for a $5 profit. Yeah, gonna maybe go to the whiteboard. I don't want to go to a $5 profit because what happens is if you lost 3 consecutive trades, $5, then $10, then $15, you just lost $15, right? But you just won 3 and you're only going for a 10, 20 pip take profit. That means you won $2 to $3 per trade. It means you lost 15, but only made 6. You're still in the negative, right? What's 15 minus 6, right? 15 minus 6 is 9. So you're still down $9. But if your stop loss was 20, 30 pips, let's take a 30 pips. So you had 30 pips stop loss, 30 pips stop loss, 30 pips stop loss. And maybe you won the 4th one. I did this analogy over the weekend. All 3 of those trades, you lost 30 pips, then the 30, another 30, then another 30. That's a total of 90 pips that you've lost. And that percentage, it varies depending on what your lot size was. All right. 30 pips could have been somebody's 1%. 30 pips could have been somebody's 5%. It depends on that lot size. But ultimately, if you lost 30 pips per position, you need to make sure that next position has a minimum of a 30 pip target. Now, if your last position scored 200 pips, then you may have you lost 3 trades, but won 1, but you still were more profitable than the person who won 3 consecutive trades. And their take profit was only 30 pips. Why? because you had a what's 90 from that's 110. So anyway, 90 pips in total you lost, 200 pips in total you gained. You subtract the difference, you scored 110 pips plus. Okay. The person who won 3 and didn't lose any, but they only went for a 3 pip take profit, 30, 30, 30. That's 90 pips. So even though you lost 3 consecutive trades, you still came out with a more profitable, you came out with more reward, if that makes sense. All right. So that 200 pips not only compensated for your losses, but you also had a gain of 110, and this person had a gain of 90 pips. Does that make sense, ladies and gentlemen? Yes or no in the chat box? Does that make sense? So when people get so obsessed with profitability, I get it. Yes, it matters. Like, I'm great at profitability, but at the end of the day, that's not the big deal. You have to understand risk to reward. So if you're going for 10 pip and dip, your stop loss need to be 10 pips. All right. If you're going for 20 pip and dip, your stop loss has to be 20 pips, because what begins to happen is you keep accumulating more losses than gains. And if you don't know how to get more gains, then what you need to work on is, how do I accumulate more reward, or how do I mitigate my losses? How do I minimize my stop losses? All right. So what people miss in trading is, okay, yeah, once you get past the skill set and all that, it's really understanding risk to reward and risk management. Now, my next question is, what is y'all investment rule? What are you investing per $100? Okay, what are you investing per $100? 20 cents, 30 cents, 10 cents. Hold on. Where is it at? Okay, great. So, okay, cool. You guys have to know, you have to know what your risk tolerance is, because people will say 3%, 1%, and I get all that, but you have to know, based off of the amount of capital in your account, what you're willing to risk, what you're willing to gain, and what lot size you should be using and according to your risk management. Remember, your risk should never exceed your profit goal, okay? Your risk should never exceed your profit goal. So a lot of you guys want to have this free life and just trade all willy-nilly. That's cool. But I'm telling you, majority of the time you're not a successful trader is because either 2, you don't have the right amount of capital in your account to see the numbers you want to see, or you don't understand risk management entirely, okay? Me personally, I don't exceed no more than 0.5%. I don't even do 1%. Where is my other phone? Okay, hold on one second. Because I understand how to get reward. Let me go to my phone right quick. Okay, so I'm gonna share my screen so you guys can see something. Okay, so now 1 second. So can you guys tell me? I don't want to go by the 10 cents per so just yet. So if you have $1,000 in your account, so let's say your account balance is 1,000. Y'all drop in the chat box for me what you're willing to lose out of $1,000 per trade. What are you willing to lose out of 1,000 per trade? I gotta go back because I can't see the screen. This chat box. Okay, yeah, drop those real quick for me, guys. What are you willing to lose out of $1,000 per position? $10, my 10, 150 to 200. Okay. Keep it coming. What are you willing to lose per trade out of $1,000 account? Okay, keep it coming. All right, good deal. All right, my second question is, what are you willing to, okay, good. So I got your answers. Okay, so let me share my screen. All right, so this lets me know that people don't know percentages. All right, so this lets me know why people accounts is all messed up all the time. So the first thing is this: if you guys told me earlier, I think the highest I saw was 7%. Okay, 7% of $1,000, guys, is $7. All right, so I mean it's $70. So that means the highest I think the loss I would have seen on here is $70. If you're willing to lose $10, that's 1% of your account balance. All right, if you're willing to lose like $100, I'm sorry. If you're willing to lose between $100 to $200, that's 10 to 20% of your account. So if you lost one trade, remember, that's what you're willing to gain, but your gains have to be what you're willing to lose. Okay. So what most amateurs do is they focus on what they can make and not what they can lose. So if you're willing to make $100, $250, guys, you need to be willing to lose that as well. Okay. Because what's going to happen is, your risk cannot be greater than your your profit goal. All right. So if I got $1,000 account, and I'm willing to lose, let's say $10. Okay, so let's do 10. Okay. My next question is, I know what I'm willing to lose, and $10 is 1% of 1,000. So that's a 1% stop loss, aka $10. Now I have to ask myself, how many pips is in my stop loss? So if that person is willing to lose $10 and you got a 50 pip stop loss, then you can only invest 20 cents per position. Okay. One trade, 20 cents on that position in a 50 pip stop loss. All right. And of course you can modify it to different variations, but ultimately 10, you can do a 10-cent lot size with 100 pip stop loss. All right. You can do a 50 pips lot. You can do a 50 cent investment with a 20 pip stop loss. At the end of the day, is whatever math you come up with, whatever lot size you come up with, it pips. It just cannot exceed $10. But you also have to understand this, okay? If you did anything greater than, so let's say you did $100, all right? So $100 is 10% of 1,000, okay? So that means after about 10 losses, you're done. Your account is done for, okay? Especially if your reward is not that good. So $100, and of course, you can invest $1, you can invest $5. At the end of the day, as long as it doesn't exceed $100. But you guys have to understand, if you're willing to lose 200, you need to be going for a 200 goal profit. That's called a 1-to-1 ratio. Okay. If you lost 100, if you made 200 and your risk goal was 100, then you had a 1-to-2 ratio. That means you made 2 times what you were willing to lose. If you made a $300 profit and you were willing to lose 100, that means 1-to-3 ratio. Your reward is 3 times greater than what you were willing to risk. Okay. You can't be in here with a 50 pip stop loss and a 10 pip and dip. That doesn't make sense at all, because all you're doing is going backwards. Your gains will always mathematically override what you were making. Even if you win, let's go here. Let's say you had the first trade, you had a 30 pip stop loss. Okay. And the second trade, goodness, SB. Let's say you had 3 of these consecutively. Okay, the last one, I don't know, maybe you just want to throw a 50 pip stop loss in there for some reason. So now you're 0, you're 3-0. All right, no, 0 and 3, because you lost 3 trades. Okay, and then that last trade, you went for a 10 pip and dip. All right, so the next 3 trades, you won 10 pips. All right. And you're excited and you're happy, but you're like, I'm not seeing any growth in my account. And even you got 30 pips on the last one. You have to learn that this still doesn't put you over your profit goal. 30, 40, 50. So you gained a total of 50 pips. Now, the reason this stuff is going to end up breaking even, because remember, whatever your lot size, whatever you were willing to lose is what you should have been willing to gain minimalistically. All right. So at the top, you have accumulated over 110 pips worth of losses, and you only gained 50 pips worth of profit. You're still in the negative. So if you had $1,000 account All right, let's do this. You had $1,000 account. They say you was willing to lose $100. So the first trade you lost 100. Referencing the top one, you lost those 3 consecutive trades. You're down to 700. That is high. That is high risk. All right. So out of 700, so then you won the next 3. It got you to, let's say what your pips is. Time divided by 30 pips stop loss. Yeah, excuse my background music does. 30 by 30 pips. So 3, you can invest $3. So you gain 30. Your lot size is $3 because I did a 30 pip stop loss. So you made 30, because 10 times 3 from this one right here, from these green check marks. Gain 30. And then I could have just did 50 times. I could have just did 50 times 3. You made 150. All right. So you made 150. Okay. But up here, where's my losses? 3, 6, 50. But you lost 330. All right. Because I did $1,000 account. Let me grab this one. I did $1,000 account with a 30 pip stop loss. Based off of, or I just did it based off of a $3 lot size. Okay, so this one up here, you invested $3. This one you invested $3 and some change because it can't go past 100. And then the last one you invested $2 because it can't exceed that 100 pip stop loss. I mean $100 risk. All right. So out of 5, 8, 1, 10. This was a $90 loss. Well, I just did it right. I'm sorry, it's here. $100. Your stop loss is $100 each. All right. So you lost 100 and your gains were right here. Okay. So you lost 300, but your gains are right here. All right. So what happens with most people is that they're so busy trying to make money that they're losing all the time. They'll do good when the lot size is small and they suck when the lot size is over leveraged. All right. Y'all have had that happen to you. All right. So you made $30. All right. Because 10 times 3. And then you made $30. And then you made 90 because 30 pips times 3. So you made 150, like I said before. And what ended up happening is you still was in a deficit because your losses was 300, which you just grew the account back up right below the capital, right below the starting balance. All right. So you made 150 and now you're just at 850. All right. Your new balance. And so what happens is people repeat this cycle. They'll grow it up, they'll lose it, they'll grow it up. So they kind of may remain the same. All right. Because this is what you call extreme. This right here, with that amount of loss, that's extensive, that's aggressive risk. All right, it's really aggressive. Everybody has a different risk tolerance, but I tell people all the time, you have to modify your loss. If your accounts are not, $100,000, guys, you really shouldn't be risking no more than no standards in your account and stuff like that. All right, no big positions like that in your account. So the question is, what type of trader do you want to become? Like, what amount of money do y'all really want to make in the markets? That's my next question for you. Like, what do you want to make per trade? All right. What do you want to make per trade? While y'all doing it, let me check this trade. Markets are moving so slow today. What type of trader do you guys want to become? Do you want to What are you doing this for? How much money are you trying to make per trade? Because you're not, like, for me, I don't, some weeks you won't trade every day. Some weeks you may place 1 or 2 positions. All right. 25, 30,000 per trade. Okay. Anybody else? Perfect. So the 25, 30K person, how much capital do you think you need to make that amount of money per day? And then what does everybody else go? All right. And then what are you willing to risk per position? What's your risk management? Was it 5%, 3%? I can't remember. All right, you want to make $50 per trade. Okay, we got 25K per trade. And then what amount of capital? Okay, we got the capital. The $50 person, how much capital do you believe you need in your account for $50 per trade? And then my 25,000 person, what is your risk per trade? Like, are you risking 1%, 2, 3, 4, 5% of your account? So how much are you willing to lose out of a 600K per trade? That's basically the question. And then my P person, what amount of capital do you believe you need to score $50 per trade? I need risk and capital, guys. Where y'all at? Hang on a second. Yes, sir. If y'all don't know, just say you don't know yet. All right, cool. There we go. All right, so let me share from this phone. That way you guys can, so I can see the other chat. Okay, good deal. So I just want to give you guys some examples because I want to put it into perspective. Everything at the end of the day boils down to your risk tolerance. But if you want longevity and you really want to see growth in your account and you want to see the type of results that you guys want to see, you have to be able to minimize your account, your risk, or you need to increase your capital. Okay. So let's start with $50 per trade. So what are you willing to risk on the $5,000 account? What's your risk on the $5,000 account? Now, for my person who put up to 2 to 4%. So I want you guys to understand that even in trading, $600,000 is not a lot of money when you trade, when you understand risk. Okay, so 600,000 times the max of 4%, you're willing to lose $24,000 off a $600,000 account. Is that correct? You're willing to lose $24,000 off a $600,000 account. So let's do 6,000 divided by 24,000. So that means after 25 positions, your account would be totaled. Okay. Now, if you're doing a $25,000 gain, you have to ensure that, what am I trying to say to you?
Typically, when I'm doing it, I'm using between a 10 to 25 pip stop loss.
That's fine. What I was going to say is ensure that you can get the reward consistently.
Now, I protect my losses. So let's say, depending on what pair I'm in, if I'm up 10 to 12 pips, I move my stop profit and then profit. And if it come back and tap it, I ain't lose.
Got you. So that's okay. So you're keeping it really, really tight. Are you allowing yourself to gain more reward? Like,
absolutely. I'm going for at least when the market is slow, I bring it down to maybe about 20, 25 pips. And when it's up, I go for 30 to 50.
Got you. Okay. So, okay. Well, at this point, I guess the question would be is, are you on track towards your goal?
I am now. I think one of my biggest issues, two issues every trader has: patience and discipline, and then just wanting to understand market structure a little bit better than I do.
So what's your profit over loss ratio?
Say that one more time.
Profit over loss ratio, meaning outside of reward, because remember your reward and profit have to at least equate. So the second question would be is, how often are you like 50% winning ratio, 60% ratio?
About 60, 65, somewhere up in there.
Okay, cool. Okay, so if you can maintain that ratio, it'll kind of protect you from your losses, because that amount of risk with that ratio is going to put you closer to not seeing a lot of growth. Because after, like I said, after 25, 20 trades, your account is over with. So even with the gains, if the losses, and that's only if your risk is, extensive, but if your risk is greater than your profit, then you definitely won't reach that goal. Because, and then what you don't want to do is, it's cool to say I don't lose anything, but the point of trading is to make money. So you don't want to always just break even if you put a stop profit in. You want to be able to see some type of return on your capital. So I would say work on, like, try to get more reward. So if your capital is like, say $5,000, $10,000, well, your math was 600K. So if you're using $600,000 account and your risk is $24,000, you have to make sure that if you're going for 24K and you're only doing, you said 10, 15 pips stop loss, then your lot size is a $1,600 lot, which,
yeah, I'm using big boys. But and I get what you're saying, but I also look at it from this perspective too. Say if I take 5 trades in a week and they all come back stop profit at 2 pips in profit, with those lot sizes, I still make $5,000 a week, and people ain't doing it every day.
Right. But the easier, the bigger the account is, people not even really think. Well, I guess it depends on the trader, because once the account gets bigger, you can just throw a little position in it. It's going to do whatever it's going to do. A lot of brokers, it depends on the brokers. They won't even allow a lot that big. You have to place multiple positions. So, but yeah, I mean, at this point, if you got your profit over loss, keep it decent. Monitor your growth, monitor your risk, and just stay on top of that. Me personally, I go for more than 30 pips. So that way I trade less. I don't have to trade 5-6 times where I can place one position to be done. So it just depends on, of course, that trading plan, the capital, a other little factors in. But
oh yeah, now, I get what you're saying. Like my trading plan, I only go for 50 pips a week.
Yeah, I don't go based off of pips. I go based off percentages. So you won't ever hear me speaking pips.
But with the lot sizes that I use, those are my percentages. And so I'm still hitting that between 6 to 8% a week.
Perfect. That's good. Good. Okay, good. Yeah, just keep making that grow. Keep making that happen. All right. So the next person, we got $5,000, and you're willing to risk 1%, which would be $50 if I'm not mistaken. Yep, $50. Okay, good. So that's good risk management. So most professional traders, you really want to see them exceed like 1%. So that's a good percentage to stick with. The $5,000, if you're willing to risk 50, then maybe your stop loss is 30 pips. I don't know what your stop loss would be. Then you can invest no more than $1.60. So just make sure, if you're going for a $50 risk, just make sure you're going for a $50 gain. Okay. Don't have a $50 stop loss and then it's 10 pip gain. That's the biggest thing about trading. I see a lot of people doing is they be so ready for the trade to be over with, or they're just trying to hop in and out. So they're cool. They're getting these little, what you call scalping type positions. But ultimately, when that hit comes, it has wiped out their goals because they allowed their risk to be so much greater. All right. So even with the gentleman saying I'm going for, like, at least I kept 1 to 2 pips. It doesn't matter that you kept 1 to 2 pips if you don't allow the trade to match what you were willing to lose. Because once the loss happens, it's going to wipe out the account. So even if you're going for $24,000 gain, but then you do a stop profit, and you only went from 10 to 15, you caught $1,600 or you caught $2,400 worth of profit. That doesn't compare to $25,000 stop loss. So you still came out on the downside where the account can't grow. So whether it's a $5,000 account, $600,000 account, you have to be willing to allow the account to catch whatever the risk is, because what people are not thinking is the risk in the future. So you may not have lost that trade today, but what's going to happen is that loss is going to catch up to you if you do not allow the initial profit goal to happen. I hope that's making sense. So even if you lost $50, if you didn't lose $50 for 2 trades, boom, you made 50, you made another 50, cool. Or maybe you didn't go for the whole $50 profit goal. Maybe you caught $20 on the first trade. You was hurry for to get it over with. You caught $20 on the first trade. You caught 30. Oh, I'm still screen sharing. You caught $30 on the second trade. And now you made maybe you made $50 in total off of 2 positions when your initial goal was to make $50 per position. So you made 20 on the first trade because you got out early. You made $30 on the second trade because you got out early, which means your overall profit right now is $50. But when that loss hit, you just wiped out the $30 because you didn't go for the entire profit goal. I hope this is making sense. Even if it's a $600,000 account, your profit goal is $25,000. But you got out early, you made $2,000, you made $3,000, don't matter. You made $2,000, $3,000, don't matter. When that loss hits, it will wipe out everything that you gained because you never allowed the profit to reach the extent of the entire goal. Does that make sense, ladies and gentlemen? Let me know. You have to make sure those goals are attainable on both ends, because whether it happens now or later, it will catch up to you because you didn't keep the standard of and not the lot size, but you didn't withhold what you were willing to gain and lose in its entirety. All right. So even me as a signals provider, I have a very, very thorough prerequisite. Do not sign up on my chat if you do not know what you're doing. I'm out here to babysit people. I rarely communicate with people. You copy, paste, and profit. So for instance, today I sent out USD/CAD, sent out a limit order. The first TP hit, that thing been sitting idled all day. Now, if TP 2 and 3 didn't hit, that's why you have to have some level of experience, because yes, TP 1 hit, but if the market start acting stupid, USD news may come out, may make a skyrocket, go back in a bullish momentum. At the end of the day, if your lot is too heavy or if you over leverage, now you made 10 pip and dip, and that's exciting still, because that's 10 times any investment that nobody would do on this planet in any investment vehicle. There's no way somebody can wake up and say, I'm gonna take $100 and turn it to $1,000 a day, or take $1 to 10. That is unheard of we have the best industry in the game, even when it comes to real estate. Now, real estate is good on long term, but at the end of the day, in passive income, but you're never going to hear somebody say that even 2 times the investment. You know what I'm saying? So it's 100% return on the investment. So you guys have to really, really understand, if I got a 10 pip, you gotta make sure you stick to it on both ends. Even in the future, do not allow, even in the future, if you had a 50 pip stop loss and you just made it, if you kept it 50 pips and you've been doing a 30 pip and dip, at some point that stop loss is going to catch up to you, because it has still always been greater than what you were going for on the profit side. Now, if you're 50 pips stop loss and you made 50 pips, ultimately you wouldn't be in a deficit. You know what I'm saying? You start at some point. Now the next trade you gave 50, the third trade you gained 50. So now you'll be 3 times what your risk is. And if you did have another loss, you still came out in profit because your risk never exceeded your profit goal. Okay. So they always have to equal. If you're going to risk 15 pips, you need to make 15. If you're going to risk 50 pips, you need to make 50 pips on that lot size and make sure it's within those percentages. So what most people do is that, and you can't be afraid to, like I said, my risk management is is actually half of 1%. So you'll never see me risking anything above half of 1% in my account. Because I realized, that was a secret to success and the longevity in it. I could lose, for instance, I did a example with a friend of mine, telling her about $100,000 portfolio. Somebody who's willing to lose even 1% of their account balance, they're willing to lose $1,000 out of 100,000. That is not me. I'm not that person. I'm the 10 cents per $1,500 person. So my signals chat is a 1% risk management. I tell them 10 cents per $300 if they want to follow that rule. But out of $100,000 portfolio, she said, okay, I'm willing to lose 1%. I said, all right, that's $1,000 per trade. So I said, but if you think about that, you mean it's gonna take you like 100 trades to like lose $100,000. You know what I'm saying? But somebody else who has a greater risk, who has a higher risk percentage, and they had $100,000 account, and they're willing to lose maybe 5% of that account, well, they're willing to lose $5,000. All right. So I said, well, if the person is willing to lose $1,000 out of $100,000 account, they can place, it would take them 100 consecutive trades before they blew the account. Or less, depending on if they over leverage, right? If somebody has a 5% risk on a $100,000 account, after 20 positions, account will be gone. So I also think about longevity. I don't think about just money hungry. It's cool. The money is not gonna go nowhere. It's not a big deal. And you guys can leverage proprietary trading firms to make more money. But at the end of the day, it's longevity, and it's really protecting the overall capital of the account and not being so. You just want to always make sure you have way more capital so that you don't have to just be so aggressive and have this high, risk position, high risk positions, and those that you can withstand that capital because you have enough capital in there, right? So a lot of things that people do. So for me, my investments, if you had to use per position or per dollar amount, is 10 cents per $1,500. Somebody else is 10 cents per $100. I'm usually 10 times most people in my risk tolerance, my risk management. So, play around with different numbers, play around with a thing. But if you really want to see growth and you really want this to become something that you can create a lifestyle from, I would say start modifying your risk management. Another thing is to don't just allow trading to be your only source of income. Most people get into trading because they want to have this, what we call free life. Now, granted, I definitely have a great life. I love my life. My life is absolutely amazing. I love my home. I love my house. I love my car. I love my family, my relationships. I love my relationship with God. I literally love every single thing about my life, and it's just getting better. But what happens is people get into trading and they just think, okay, it's just trading and making money and making withdrawals. You still have to pay taxes. You need to open up a business account. You need to open up an LLC. You need to allocate, 18 to 20% of your income that you pay yourself. If you're going to pay yourself, you allocate taxes. And then also the smartest way to do it is don't pay yourself a lot of money. Just allocate a lot of your money into investments that are tax deferred and build wealth that way. So not only use trading as sort of a source of income, but use it as a vehicle to allocate more wealth so that you can establish more passive streams of income. My goal is not only to be, of course, a seven-figure trader, but my goal is ultimately to have $1 million worth of passive income come to my house a year and then per month. So you don't want to just leave your wealth at I'm a day trader. Like you want to say, no, like for me, I could sit here and not touch a trading account and still make money. So that's what you really want to get to, because there will be seasons when the markets are slow. There will be seasons when the markets are amazing. And then you don't want to just say, you just don't want to leave your income at that, especially for somebody that's truly want to build wealth and establish wealth. Day trading is what you call active income. It is not passive income. So if the markets, like there was one week, what was at the end of May, the last week of May, I didn't send out a single signal. I did not like the market conditions for my subscribers. Now, I may be personally placing trades, but even I didn't place trades for the first time that week. Probably in 4 years, probably. I didn't place trades that week, and I didn't like the market conditions. So I didn't send out a single trade. And we were 3-0 the week before that. And then we went 7-0, 7-1 the week after that. I think we went I got to see the stats from last week. But it was, you got to know when it's smart. You can't just be desperate to trade. So if somebody was trying to pay their rent that last week of May based off of my signals or something like that, there was nothing sent. And if you had enough wisdom to say, I'm not going to place a position because you understand the market conditions aren't that great, then you got to make sure, you don't want to become a paycheck to paycheck type of trader. Okay. And that's what most people do. They get in, they get the money, they're attached. I'm not emotionally attached to money. That's another thing. You got to become unemotionally attached to money and see it more as a resource, as a tool, not something that controls you, but you control it so that you can begin to build more wealth. Right. So it's just a lot of different perspectives that go into it. But you have to make sure that whatever level you want to reach, that you're prepared for it. Not just I secure the bag, but there's other entities around you securing that bag that play a role. Where you're going to allocate it, paying taxes. Are you going to just keep it in your account, pay yourself the least amount of money. When you pay yourself personal income, that is what gets taxed the most. So what you want to understand is establish an S Corp or LLC, push all your money into a business account, spend all your money in your business account, get tax write-offs. That way you're still maintaining your lifestyle, but it doesn't look like you are paying yourself that much amount of capital when it comes to your personal income. You also have to make sure that you don't pay you make sure you pay yourself just enough, because what happens when you want to start making purchases and stuff, they'll say, well, you don't make a lot of money, but you do, but you just spend it all through your business account. So there's a balance you have to find in that space. But I hope y'all gain some value tonight. I have to switch this call over to my mindset call. If you guys have, what's up, Mr. Foreman? If you guys have any questions, concerns, testimonies, ideas, please bring them back next week. Next Monday, I'll be on here next Monday, so we can actually get a little bit more thorough. My laptop killed on me on Sunday during my master class, so I think I burnt it out. But we can go more of a charting next week. But I really wanted to give you guys some insight to, it ain't just entries, it ain't just, it's that ain't even the biggest part. The biggest part is, do you really have sustainable account growth? Do you have the right amount of capital, and being able to modify that risk to where it's so much smaller, but you know how to get greater reward, right? So for me, I'm a 20 pip, 30 pip stop loss, but I allow my positions, 2 or more positions at a time, to go for, 50, 100 pips, 300 pips. Like I was in NAS 100, and my mom was in NAS, but NAS MAC 4,500. I was only willing to lose $300 off that trade, but it hit 4,500 pips. So I'm not gonna tell y'all the gains on that, but just know it was a beautiful trade. I'm in USD CAD. I'm in another trade, got a couple of positions open. My reward is always gonna be like 5 times greater than my risk, always. All right. So anyway, y'all have a wonderful day. I'm going to just press stop on the record. I'm going to upload that.